So I will bring into perspective the bank insurance, right? The merging of banks and insurance companies. Now, if you look at this merger, it involves hefty amount of money. So what I've seen is some Kenyans are, asking, okay, fine. We complain about our economy a lot, especially present day, but at the same time, the kind of money that is here, like you said, can go up to the likes of 500,000 and more. So this particular, of course, because they're banks and the like, that's a whole lot, way above 500,000. And so it shows Kenya has money. But the economy is showing something different, so we need to articulate here how we're supposed to register this or understand why it's happening now and why it's necessary to begin with.
Yeah, let me explain the bank assurance model.
Right.
Again, it was an aspect of trying to increase penetration. When you look at banking, a lot of people have bank accounts. Almost 80% of Kenyans actually have a bank account. But I've said only about 37% of Kenyans have insurance policy. So you can see that gap between 37 and 80. So we said, because the banks have that data bank of their customers, the ones who do not have insurance, can we use the banks to talk to these people who don't have insurance covers but they have bank accounts for them to access insurance? That's actually the whole aspect of bank assurance. It's just to use the banks to get their customers access insurance.
Right.
That's all it is. Yeah.
Okay.
And whether it is micro insurance or the conventional insurance, it can be both. Doesn't matter.
Okay, so we're not supposed to look at the amount. It's just that obviously banks would be on that particular scale.
Yes.
The relation to the economy, I think here was the conundrum.
Yes.
That the economy is not doing as well, especially for those on the ground who want to do different transactions, but the money here is hefty. And I think that's the disparity that people are having,
But it's interesting because we are saying 80% of Kenyans have bank accounts. So what exactly are you saying?
Again, they would argue that what is in those bank accounts could be the issue, because also we have bank accounts that are not active. We have bank accounts that the balances are, not very good for that matter. So if you're breaking it down...
You know what we are saying?
Yes.
If you're able to open a bank account as maybe... Let's talk of somebody, Mama Boga in Gikomba, can open a bank account. And in a day, they can put 200 shillings in that bank account.
Right.
What stops them saying, out of the 200 shillings I put in the bank, can I use 10 shillings to buy insurance? It is as simple as that.
All right.
Yeah, which can work very well. Yes.
All
it's only that they need to understand, they need to know. And I think that's where the issue is.
Okay, so when we're looking at now that you're saying need to know, sensitization when it comes to insurance in Kenya, it's still not the best, right? On the ground, are there trainings happening, or just, let me not say trainings, you did mention trainings in regards to the officers who are in the insurance companies, but sensitization to the people, deliberate, so that we, like I said earlier, one of the biggest issues is the investment, someone thinking they're investing because they're taking a cover. And you cannot tell them otherwise.
Yes.
Okay.
Okay, let me explain this. We are doing this sensitization in different ways. Number one, since 2013, we came up with a deliberate move to train insurance people in the 47 counties. And we went to the 47 counties, training at least 100 people in every county on insurance and giving us certificates. Whether they are working in the insurance industry or not working in the insurance industry, just to get people in every county who can talk about insurance. That we did. Number two, we have programs we call Bima Mashinani. The other day, last month, we were in Kericho, we went to Homa Bay. All we are saying is we go to the ground, talk to people, mobilize people, talk to them about insurance, explaining all these things. And we are doing that throughout the country. We've been to Tana River. We went to Tana River and they bought insurance. They didn't know about it.
Okay.
Yes.
Right. And with that perspective,
yes,
different counties have different needs.
yes,
You know, so for example, you know, the people in Tana River,
yes,
they would have particular concerns.
yes,
Right. So I want you to articulate how you're able to gauge every county
yes,
with their different concerns to give them the particular covers that they need
yes,
that are practical to help them on that particular scale.
exactly. We usually collaborate with the administration on the ground, so that we can assess the needs of every
Before
county.
now,
Yeah.
you start the sensitization.
Yes.
You start with the county.
Yeah, we start with the counties.
Government.
Yeah, we talk to them, we agree with them. These are the needs of the community. Like in Tana River, they were not buying motor insurance, they were buying livestock insurance because that is what they need there. Yes. So we talk to the administration and agree on what they need, and then we come with the appropriate message for that county.
All right.
Yes.
Right. So one of the things that we need to look at is now, let's go deeper and highlight how we know an insurance company is legal.
Yes.
You said they need basic certification.
Yes.
They need training,
Yes.
right? So if I go into an insurance company in a physical office,
Yeah.
for that matter, are there things I need to look at the wall? Are there
Yes,
things
yes.
that I need to, understand?
Yes.
Apart from the popular ones, we know their names offhand.
Yes.
You're like, this is legit, this is legit.
Yes.
But there are others are also coming up, like you said, microfinance,
Yes.
the smaller ones,
Yes.
that we may not know the same.
Yeah.
So I want you to give us that picture so that people are not getting scammed. People are really getting scammed when it comes to insurance.
If you go to a physical office of anybody who says they are practicing insurance, the requirement is a license displayed at the reception from IRA. That's the first thing. If you don't get a license displayed at the reception, then you may be dealing with an illegal entity. That's where you start. They all have a license and it's supposed to be displayed. Even me, when I go for on-site inspections in the companies, that's where I start. And I'm the one who has given me the license, but I'll start by saying, have you displayed the license? It should be there. That's the first step. Because for us to issue that license, there are processes that are followed to make sure these people are able to deliver the message or the promise they say they are going to give to their clients.
Okay.
So that's very important.
Okay.
Yes.
Is that the only key thing, or are there other factors that you need to look out for?
That's the key one. Actually, once you see that license, you are comfortable now to seek the services that you need.
And you're good to go?
Yes, yes.
Okay. I want you to also highlight the door-to-door, insurance cover, the personnel.
Yes, yes.
From
yes.
these different companies who come, they're knocking at your door.
Knocking on your
yes, and they want to give you cover, right? For some people, and people have lost money, because the same way you're going to counties to sensitize, others have also just on the spot through the explanation, they've seen this can help them. They've been able to give their money, but they realize I'm giving to a non-existent person. First of all, this person is not even real, in terms of their identity. So
okay, that's very important. Number one, we say that insurance is not bought, especially for the non-compulsory insurance. You buy motor insurance because it's compulsory. If it wasn't compulsory, probably you would not go buy. So insurance is not bought, it is sold. It is sold. So somebody must come to you. In 80% of the cases, somebody must come to you and talk to you about it. That's where it starts. Now, this person who comes to you and say, I'm an insurance agent from this and this company, first thing, ask for their license. Even that individual person who comes knocking the door, ask them, how do I know you are authentic? They are supposed to produce their license and show you that I'm licensed by the Insurance Regulatory Authority as an agent.
okay.
That is where you start. Once you get that, then you can deal with them. But I have another caution to give. When it comes to paying, don't pay them. They are not supposed to be paid. They don't give you cover. The cover is usually given by the insurance company. So any payments to be made should be made to the insurance company, and I will say directly to the insurance company.
Many people have
Don't
paid
give somebody
the individuals.
money.
Yes.
Don't give somebody money. Let the money be paid directly to the insurance company, and it's very easy to do that. They have pay bill, they have bank accounts, whatever it is. Just paying directly to the insurance company.
Okay.
Yes.
Let's circle back to mandatory insurance. Like you said, for the car,
Yes.
that is mandatory. What other aspects of mandatory here are we looking at in terms of the insurance covers?
For the public, I think it's only motor. We have other policies like professional indemnity for certain professions, if it's doctors, if it's like even insurance brokers, there are professional indemnity covers which are compulsory. But for the public, what is compulsory is motor, and probably the what we call the workman's compensation.
Okay.
For those who have employees,
Got it.
that is also compulsory.
Right.
Yes.
Now, insurance premiums.
Yeah.
Is another big thing and conundrum. So before I even, go deeper, I need you to define what they are.
Okay.
For those who may not quite understand, define for us.
Let's go back to my earlier example of the houses and houses burning down, where I said we may say out of the 100 houses, we'll get 5 of them burning down, and the cost is 100 million. So if all of us share that 100 million, the amount to pay is, for example, 10,000 shillings everybody. This 10,000 shillings that we are going to pay is what we call the premium. Yeah, that is my contribution to the loss which may occur in the group. Because insurance does not work if it is only one person. If there was only one person with their vehicle, insurance will not work. We need many people. We call it the law of large numbers. That is how insurance, there must be many people who are exposed to the same risk. So we pay a small amount to get the cover, so that if the loss occurs, the insurance company can pay the loss.
Okay.
So that small amount we pay to get the cover is what we call premium.
Okay.
Yes.
Also, I'm not sure if you had answered the question of the circulation of the money, because like I said right before the break, there's a lot that goes into a lot of money from people.
Circulating.
Yes. How do you ensure that the money that is in the insurance, bodies or cover for that matter, is circulated? Because one of the issues I saw, and the question is, how is this money put back also?
Okay. An important question. You see, when you pay that premium, you pay, all of us pay our premium to an insurance company. The insurance company collects the 100 million. They don't keep the 100 million in the office. What do? They invest that money. So they will buy government securities. That's how the money circulates. They will put bank deposits for banks to give loans. They will invest, some of them will invest in land. They will build buildings. You have seen a lot of buildings belonging to insurance companies. So the money is not put somewhere idle. It is actually released to the economy for circulation and to do other things. But with a lot of care. There is a lot of mathematics involved in that. Because you don't want to put the money in a building. Then when the claim comes,
there is no money.
There is no money to pay the claim.
That has been the issue.
Yes.
That has been the issue.
A lot of companies have gone down because of that.
Yes.
There are companies who have gone down, not because they don't have assets. They have assets, but they can't pay claims.
And that is the
liquidity
issue.
is very key. So as they invest, they do a lot of mathematics to make sure that at any one point they have enough money to pay claims which occur.
Okay.
Yes.
So there is an agreed particular percentage by IRA to make sure that the investments can happen that will not affect claims that may come up.
Yes.
Right? So how does that look like? I want you to paint us that
It
picture.
is not a fixed percentage. Each company has its own calculation. So for the authority, we will just look at the liquidity ratio of this company. And it can be, it's every company has to explain itself. This is the way you have done it, depending on the kind of the profile of the business they have. Because if, for example, if it's light business, you don't need a lot of liquidity. You just know I've given you cover, I'll pay back the money in 15 years or 20 years or something. So that money can be invested for 20 years without any worries. But if it's a building or a motor vehicle, this accident can occur anytime. So I need more money to take care of that. So it depends on the business the insurance company is doing. Yeah, okay. It's not a fixed ratio.
All right.
Yes.
But what I was asking is, it's known to you as the regulatory body?
Yes, for each company. We can calculate for each company.
Okay.
Yes.
So do they come to you to calculate to you, or do they make their own calculations and then now they come to you to establish it?
They do their own mathematics and file that with us.
Got you.
Yeah, to check. We get returns every quarter, every year, and we analyze that to look at what they are doing with their investments.
Okay.
Yes.
Now, one may ask, what is, IRA's vision when it comes to, how insurance is in the country? Let's say 5 years from now.
Yeah.
What are you looking to do? Because as you can see, insurance has been there for a while, but there is more sensitization, which you already said is happening in different counties, in collaboration with different county governments, tailored to the needs of the people.
Yes.
But now when it comes to the vision, I want you to elaborate that for us.
I think I can explain that starting from the mandate. What is the mandate of the authority? It is to regulate, supervise, and promote the development of the industry. That's basically our mandate. What does this mean? It means making laws to regulate to these players on how to operate. Now, like the liquidity you are talking about, we make laws on all those aspects and ensure that they go by those laws. They follow those laws. And that's why now they file to us to see that. Now, what we want to see is an industry where policyholders feel protected, because with the campaigns we are having, we expect a lot of people to get insurance. We don't want a situation where people get insurance where I'm told before regulation came, people will give you a policy and tell you we will cover you for 1, 2, 3. Then in small print, they exclude all the benefits that they have told you they will give you. Right. So we don't want that situation. We want something which is very clear, transparent, where if a customer is promised something, that promise will be kept. So we want companies which are financially stable and best practice, because the industry is also developing a lot. A lot of things are changing in the world, and we want to be one of the best in the world in insurance. Yeah, that's our aim.
Okay. And when it comes to a company wanting to register itself, as a body, as a cover for that, not as a body, but as a company for that matter, how long do they need to be in place? What do they need to have? Because these are very key issues. We're seeing things popping up left and right, and again, there's the issue of trust, which many people have. Because
of that issue of trust, you don't just license anybody. You will not just come and tomorrow you have a license. When you come for a license, the scrutiny is just too much. First of all, what they usually do is to give us a proposal. You remember the diaspora one you said? A proposal to come and tell us, we have seen an opportunity here through our feasibility study. We think these people need cover and we can provide that cover. And here is our proposal. We look at that proposal. And that process can take up to 60 days for us to scrutinize that and see whether it makes sense. If we are happy with that, then we'll give them something called an approval in principle. An approval in principle just says, we are okay with your proposal. Now, come in now, meet the requirements for licensing, which means put in the required capital. Companies are supposed to put in money in form of paid up capital. Tell us the staff who are going to work for you. the whole aspect of governance, how is it being to be governed? Where are you going to have offices? We want offices where clients can easily access, and offices which are presentable. You know, all those aspects. We look at all those aspects. Once we are satisfied with that, and that again, that second phase can also take another 60 days.
Okay.
Yes.
Oh, I see. All
yes.
right.
So it's not something easy.
Right.
So it could actually, in most of the cases, the experience I've seen, it's unlikely to take less than a year for somebody to get a license as an insurance company because of those kind of checks. We will have to check who are the people. Are they conmen? Are they doing money laundering? Because we are telling people to bring in 600 million. We will ask you, where did you get the money from? Prove to us that this is your money. You know, a lot of aspects.
All right. So as we wind up, I need you to highlight quickly this aspect of, health insurance.
Yes.
Because you will see many people saying, oh, I went to, to the insurance body to claim my outpatient, or my inpatient isn't working, and it's not clear for some. And there's a lot of heartache and, pain, especially because most of them are emergencies.
Yeah.
If not most, but most that I've seen are emergencies, and they cannot seem to get their claims right. So I need you to articulate that.
Yeah, health insurance is, health insurance is not very old in Kenya. It's actually, we were not even collecting statistics on medical insurance until about 10 years ago, when employers started making this as a benefit to employees. Initially, it wasn't there. And it's a new line of business developing very well. It's actually overtaken motor insurance now. It's the biggest class of insurance business at the moment. And it's important for people to understand this. Where the problems comes in is people get a policy, but they don't read what they are being given. Remember, insurance is a contract. It's actually a written contract. Ensure you have a policy. Read that policy to understand. Of course, the agent will explain to you, but you also have an obligation to read and understand what cover you have. Because the policy will say, we cover this, but this has a limit. Now, when you go to hospital, you did not read that there is a limit on pre-existing conditions, for example. Then the doctor says you have a pre-existing condition and all that. So the insurance company says the cover is very clear. It does not cover pre-existing conditions. But you never read the policy. If you read the policy, you can actually even have a discussion with the company. This limit is not good for me. Can I increase it to 10 million? Can I do this? If you know, you read the policy and understand. Yes.
Okay, sir.
Yeah.
Thank you for that. There's still more conversations we can have around, especially health coverage in Kenya. But with that, for now, we will leave it there. Okay. And I want to read feedback. We have one from Justina Omai, who says, acquisition is very easy, but when it comes to payouts, they introduce legal jargon. Let that come back again. Just one more time. It's disappeared on my end. There you go. They introduce legal jargon, and the devil is in the detail, kind of counter arguments that one does not get paid, which really beats the purpose of acquiring that insurance.
And that's what I'm saying, because you never read the policy document in the first place. So you come to discover during the time of claiming.
Okay, then.
So let's read the policy document at the time we acquired that policy.
Okay, Mr. Kalai, thank you so much for being here and articulating some of those issues. Of course, we do need more time. Insurance is very pertinent and key, as you've seen with the kind of questions that we've had this morning. Thank you so much for watching Amka Vibe Check. And coming up shortly is Tony Mirigi with Trend Talks. Of course, we'll be back with so much more. Stay with us.